Good afternoon. Hi, everybody. It's August 14th, Monday, August 14th, 2023. My name is Jason Isaac. I'm coming at you with the NCM Global Income with Growth update on what we're doing. I guess the last time I was coming at you guys was June. I guess it's been 2 months already. Wow, the summer's just flown right by. And that was Juneteenth, I guess, that new holiday that's kind of popped up. Topics of the day. What are we going through right now? Well, it looks like China's having problems with their real estate. Seems tough. Be a common refrain, and there's pressing liquidity issues with that. Interesting note I read this morning, Goldman Sachs has put pen to paper and come up with an idea that they look like there might be some rate cuts from the Fed in the second quarter of 2024. On the individual company side, U.S. Steel just got a big buyout offer from Cliffs, so I guess maybe the U.S. steel market is alive and well. What else do we got going? Things that we're going through a big pause in the markets right now after a huge run at the beginning of the year. Got some headwinds. Yields look like they're a little bit of a problem. NDX futures, spoken with many of you. One of the things that I look at is small-time traders and what they're doing on the NDX futures, which is the NASDAQ 100. They seem to be very, very, very bullish. And when small-time traders are very, very bullish, it's time to just pump the brakes a little bit. So that's one thing. And then oil, I got a couple of research houses that are suggesting that with oil having a little bit of a rebalance, that maybe we might be a little bit too early to call a win on inflation. There's some things that are going to be coming through, especially in the third quarter, that suggests that the Fed is going to still be watching it like a hawk. So it might be a little bit too early to put the flag up and say we've won the fight against inflation. What has changed in the GIG? Let me review my notes since the last time I came at you. Well, we've deployed some cash. I think we're running about 8 or 9% cash back in June. That has all basically gone into the equity markets. Fixed income stayed mostly the same, about 11.5%, but cash has been brought down from about 8 or 7% down to 1.5, and equities have gone up from about 81, 82 to 87, 88, give or take. The region's more or less the same, taken a little bit off the table from Europe and actually deployed that towards Japan. It looks like there's some opportunities there. But the US and Canada more or less have stayed the same. The top 10, some of the major changes, what did we have? We had Oracle, Toll Brothers, Starbucks, Atlas Copco, which is a compression company out of Scandinavia, Aon, a financial company, and Tempur Sealer were all in the top 10. They've all been brought down, haven't been wholesale changes, just taken some money off the table with those things, and then redeployed. Did add to a little bit of Sony, and it's a little bit weak today, and added a little bit more. It had a messy quarter, but comfortable with what it's doing going forward. ASML, the semiconductor company out of the Netherlands. Eli Lilly and Novo, these are the two drug companies, one in the States, one in Europe. And they specialize in those obesity and blood pressure drugs. I think it's called Gladfly and Ozempic. Just had huge runs last week. So we've taken positions and they've come up in the top 10 just because I think they're up 20% last week, both of those names. And then Accenture, which is basically the little form of IBM, a tech consulting firm. Happy with it. The other major change that we did, though, because we're going into a scenario where the markets are going to be a little bit choppy. We don't think we're, past the bull market, and we're just taking a little bit of a pause. What I have done, though, to dampen a little bit more volatility is instead of the top 20 being 45 or 50% of the portfolio, I have brought that down significantly. It's only about 35%. So while the top 10, there's a lot of names in there that are similar, like MasterCard and Microsoft and names like that. I have taken some money off the table and broadened out the investment base of the portfolio. Questions going forward, what to do with Apple? It seems to be the issue, the devil's in the details. It is such a huge weight in the technology space and consumer discretionary space, depending on how you want to classify it. I don't have it in the portfolio. It's a scary call when you're a portfolio manager to not have such a huge weight in the portfolio. I go through and I do my metrics and I try and stick with the discipline, and the growth just isn't there. That being said, I'm not saying it's not a good company. It's just the growth's not there. So it has sold off. It's been a good call to be out of it over the last 3 weeks, but over the last 2 years, it's not been a good call. So I have to really juggling with that. And then just read another note from Morgan Stanley here that says it's in runways in sight for a soft landing, meaning it kind of what I'm happy with what's going on in the GIG this year, because it really sticks with the wheelhouse of what it's all about. Very aggressive on the asset mix call and very conservative on the security selection, and that has actually bode well this year, and it's helped out. So the next couple of months will be interesting. We'll be watching it like a hawk, like I always do. And looking forward to coming at you in a couple of months, hopefully the rest of the summer. And Labor Day is good for everybody. With that, I'll sign off. Thank you. Bye-bye.